Good ladies, students. This is the continuation of chapter 10. I'm just focusing on the other aspect of this chapter, which I will be focusing on exercise or question 10.6 by passing 10.8 to 10.9. Now, there are formulas that you really need to master first with regards to this part of the work in this chapter. So I will start highlighting these questions. Now, in a contract costing, we don't recognize profit in the statement of profit or loss or in the profit or loss account up until certain things are fulfilled. Then we have these two formulas that will help us to determine when do we take the profit in a contract environment or contract costing environment. A substantial cost incurred means that the contract is 30% to 80% complete. That means if, let us say, we have a contract or a project to build a stadium or to build a shopping center, the minute the contract is between 30% to 80% in terms of completion, then it is reasonably certain that a profit will be earned. That means we can say that we can now earn the profit considering the fact that the contract or the work is between 30% to 80% in terms of completion. Then this method of taking into account the profit in the statement of profit or loss when the project completion or stage is between 30 to 80% is called the work certified method. So which therefore means that you can be given a scenario where you are told that the project is 58% complete, the progress in terms of completion, then you are required to calculate the profit. Then you'll already know that the method that you will use to calculate the profit to be recognized in the statement of profit or loss will be using the work certified method, because the work certified method only takes profit into account when the project is between 30% to 80% in terms of its stage of completion. And there is a formula that we are to apply in the calculation of this profit. The formula says profit taken is equal to 2/3 or 2 over 3 of the notional profit times by cash received from progress payments divided by the value of the work that is certified. And remember, the value of the work that is certified, it is the cost of the work that is certified plus markup percentage. I will partly highlight that as we progress. So the cost of the work that is certified plus the markup percentage, then that gives us the value of the work that is certified. Then we continue to the explanation of the other aspect of this formula. Now, how do we calculate the notional profit? Because cash received from the progress payment is not a problem, and the value of the work that is certified, it is also not a problem. But notional profit is equal to the value of the work that is certified minus the cost of the work that is certified, meaning it is the profit from the cost of the work that is certified that we have made, in other words. So that is the notional profit, meaning profit you made based on the progress of the work that you have done. So that's what is called the notional profit in terms of contract costing, when a work certified method will be used to calculate the profit, meaning when the project is between 30 to 80% in terms of the progress or stage of completion. So this is the information that you need to master. You must know this formula by heart. It's not a difficult thing. Then we have another method of taking a profit. and there is a formula also for it, which is the last formula. When the project is above 80% in terms of completion, meaning the project is nearing completion, it is very, very close to be completed. Now, how do we take the profit to be reported in the statement of profit and loss in such a scenario? Then it says eventually profit can be assessed with a reasonable certainty, meaning we are almost certain that the company will make such and such amount of profit. No need to exercise prudence, and it is also called percentage of completion method. So when we are required to take profit using percentage of completion method, then you know that you are taking into account the near completion method. In other words, where the project is above 80%. That means, again, you can be told that the project is at 90% in terms of the stage of completion, and you are required to calculate the profit to be taken. Then by default, you know that this method of calculating profit will be taken or will be used whenever the project is 90%, which is above 80%. But the minute is 80% and below 80% up to 30%, then we know that we'll be using the work certified method, which we dealt with above. So now, what is the formula for this method of calculating the profit? It says that profit to be taken is the progress payment to date, meaning progress payment that we've received to date. Divide this by the contract price, and we multiply it by the estimated total profit on completion. And this is the estimated total profit on completion. Then the estimated total profit on completion must be calculated. It is the contract price deducting the actual cost incurred up to date, and together with the estimated cost to complete the project. So we also need to calculate that estimated profit. Then after we have calculated the estimated profit, then after we can we can calculate the profit to be taken when the project is above 80% in terms of completion. So please have these formulas, guys, at the back of your mind. Take screenshots where you can, or write them down as I was explaining, or look for them in your textbook, because now we are going straight to exercise 10.6. Then after I will be doing 10.9 via 10.8. So we have now our practical question that we are to take into account, which is question 10.6. It says in question 10.6 that Mulilo Ltd have supplied the following date or data concerning one of its product. I think that is data. Now we have the following contract or the project. It says the contract price. We do have the price of the contract, 200,000 rands. We do have the cost incurred to date, which is 115,000 rands. Then we do have the estimated cost to complete the contract, which is 37,000. Remember, the 115 is the cost already incurred to date. Then the estimated cost to complete the contract, it is 37,000 rands. And the value of the work that is certified by the architect, it is 120,000 rands. And I want to bring financial accounting 1 into perspective here. When I spoke previously about the what we call the markup percentage. Now, the value of the work that is certified, it is the selling price of a product. In simple terms, it is the selling price of a product. Now, if this is the selling price of a product, how then can we go back and calculate the cost price of that product? In this case, we're talking about the value of the work that is certified, which is the selling price of the work. The cost of the work that is certified, it is the cost to construct the work if it's a construction industry. So now, if this is the selling price of the work that is certified, meaning a markup percentage was already added, then now you can be given a markup percentage where they say this company always adds 10% or 15% or 25% above the cost of the work that it has completed in order for it to sell it at the value of the work that is certified. So now if you have that selling price, you can be given a markup percentage, maybe 50%. Then you'll have to use your financial accounting 1 knowledge, which I am sure that you still have it, in order for you to derive the cost price of the work that is certified. Please don't say we did not teach you such. Otherwise, it is financial accounting 1 knowledge. Now, we are then now required to calculate what amount of profit should be taken on the contract using each of the following 2 methods. We are using here the work certified method, and we are using here the percentage of completion method, which is near completion method. Now, I just want to bring another thing that is very important. Maybe some of you have been asking as I was explaining the formulas. The question is, how do I know at what stage is the contract at, or the project at? Is it at 40%? Is it at 90%? Because they don't always tell you which method to use. Fortunately, in the current question we are dealing with, they told us that we must use the work certified method, and we'll just use the work certified method. And they also told us to use, in the second requirement, the percentage of completion method. So we know that we are going to use these 2 methods, but we at some time need to know how to calculate the percentage completion, which is called the degree of completion. But this question is not focusing on determining either the project or the contract is between what percentage. They just say, don't worry about that. Just assume that the percentage, it is between 30% to 80%. So in other words, use the work certified method to calculate the profit. But in the next question, which is chapter 10, or no, question 10.9, we first have to determine the degree of completion, meaning determine either the project is at 55% complete, or is it at 95% complete. Then the minute you determine the degree of completion, then you'll be like, okay, if the project is 55% complete, then we use the work certified method. Then after, if another project is 95% complete, after which is the calculation of the degree of completion, then now you can say, oh, if it's 95%, then I can use the near completion method, or the percentage of completion method. So now that is also quite important to keep it at the back of your mind, because question 10.9 will be instructing us to calculate such. So now we then continue with the data on question 10.6. Now we are required to use the work certified method. Remember, I said that please take note of the formula. I will not be going back to the formula sheet now. Then we go straight to the calculations. First of all, we know that that formula says 2/3 of the notional profit. We first need to calculate what we call the notional profit. We need to calculate notional profit. This is number A. Notional profit, we know that it is the sales value of the work that is certified. It is value of the work certified. Value of the work certified. Then we say deduct the cost of work that is certified. Cost of work that is certified. Cost of work that is certified. Please write everything. I just don't have enough space. Let us look for the value of the work that is certified. Then we have the value of the work certified and the cost of the work that is certified. then we say 120,000 rands minus 84,000 rands, then this will give us the notional profit. 120,000 rands minus 84,000 rands, this will be 36,000 rands, meaning our notional profit, it is 36 rands. So now this is the profit that we have taken from the cost of the work that is certified and the selling price of that work. In other words, once again, it means it costed us to construct the work or to complete the work, it costed us 84,000. But why now the value of it is 120,000, yet the cost is 84,000? Obviously, it's not revaluation. We said plus markup percentage. We said plus markup percentage or markup amount. So now that will give us the sales value of the work that is certified. That is why the cost of the work certified will normally be less than the value of the work that is certified. So now that we have dealt with that, we then need to go to the formula and say, how do we take the profit using the work certified method? Then I will say profit taken is equal to 2/3 times by notional profit. Remember, our notional profit is 36,000. Then we multiply that, if you remember the formula, we multiply that by the cash received from progress payment. Multiply by cash received from progress payment. Cash received from progress payment. Divide this by value of work that is certified. Divide by value of work that was certified most of the time by the architect. Then we then do our calculations. I always prefer that you first say 2/3 times by 36,000. If you do that, it will make your life very easy. 24,000 times, then we look for the cash that was received from progress payment. Cash received from progress payment, where we do have progress payment received from the client. The client has paid us 100,000 rands. Now I just want to bring this across once again, or not once again, for the first time, but I did it in the previous questions. The value of the work that was completed, it is 120,000 rands. But we have received only 100,000 rands. The difference of 20,000 rands is what we call retention amount. Whenever you ask a person to do a job for you, either you are renovating your house, maybe the person is doing tiling in your house, you don't pay them the full amount, yet they are not done with the work. Now, if the person has done 20% of the work, you give them 20% of the work, and in that 20% of the amount that you are giving, you also keep part of it. Why are you keeping part of the amount that you are paying? Is because if the work that the person is doing is not good work, then you can call them back and say, man, this is not a well done work, so please come back and do it. So always have money that you retain from the person doing a project for you, so that if they did not do a work of a good quality, you can say, man, please come back and complete this work. Then after that, you can give them the retention amount. So now this is the retention amount. The client will retain 20,000 for obviously a specified period of time to verify and confirm that the work that the contractor has done is of good quality. Now, the difference is the retention amount. Then we are now saying the cash received, it is 100,000 rands. We divide by the value of the work that is certified, which is 120,000 rands. Then now we go straight to the final answer. 24,000 times by 100,000 divided by 120,000. It gives us 20,000 rands. So now this is the profit that will be reported in the statement of profit or loss or profit or loss account by the end of this given accounting period, if this is the end of the accounting period. So yeah, this would be the profit taken using the work certified method. Then now let us go to the second requirement, still under 10.6. Second requirement, we are calculating the profit using the percentage of completion method, meaning when the contract is nearing completion. Remember, when the contract is nearing completion is when the work is over 80% in terms of completion. So now remember, I said once again, we are not calculating now the degree of completion, meaning the percentage of completion, in order to decide which method of taking the profit should be. We are just instructed to use this method and the other method. Now we go to the second method, and the second method, if you have your formulas in front of you, it says profit taken is equal to let me say profit taken is equal to progress payments received is equal to progress payments received divided by contract price divided by the contract price times this by estimated profit times by estimated profit. We need to calculate the estimated profit first. Now, how to calculate estimated profit? It is the contract price minus it is the contract price minus the total estimated cost. So we're calculating estimated profit. Estimated profit equals contract price the contract price, I think it was 200,000 rands. Yes, this is the first one. Contract price is 200,000 rands. Then we have our estimated total cost. Estimated total cost. Our estimated total cost is made of the cost incurred to date. Cost incurred to date, meaning the cost that we have incurred so far, plus estimated cost to complete the remaining work. Estimated cost to complete the remaining work. Estimated cost to complete the remaining work. To complete. Now let us look at the cost incurred to date. The cost that I incurred already up to date is 115,000 rands. These are the costs that we have incurred to date, and we look at the estimated cost to be incurred to complete the contract. We are estimating, or it has been estimated, that to complete the remainder of the work we will incur 37,000 rands. So that will be 37,000 rands. The total of the two will give us what is called estimated total cost. Estimated total cost is made of 115,000 rands plus 37,000 rands. It is a total of 152,000 rands, and that has to be negative. So the difference between the contract price and the estimated total cost, it is what it's called estimated profit on completion. So this is estimated profit on completion. Estimated profit on completion. We are estimating that on completion we are going to make a profit of 48,000 rands, meaning the total profit for the entire contract we expect it to be 48,000 rands. It is still estimated, not actual. Therefore, now that we do have this part of the formula, then we can say profit taken equals, the formula says progress payment received, and our progress payment cash that is received, it is a total of 100,000 rands divided by 200,000 rands being the contract price. So we have 100,000 rands divided by the contract price of 200,000 rands times by estimated profit to complete, which is 48,000 rands. So now let us check how much profit should be taken and reported in the statement of profit or loss. Remember, once again, this is the profit that we estimate it will be at the end of the project. So now we are not at the end of the project, so we are not going to be reporting this in the statement of profit or loss because this time has not yet arrived. So now hence now we must use the formula to say up to date how much profit can we report in the statement of profit or loss. That is why now the intervention of the formulas come in. Then we say 100,000 divided by 200,000, it will be 0.5 times by 48,000 rands. So that means the profit that we can report today, if today was the end of the accounting period, it will be 24,000 rands. 48,000 rands is the expected profit to be made at the end of the project or at completion of this project. So hence we don't report 24,000 under the statement of profit or loss. Hence we don't report 48,000 under the statement of profit or loss, but we report 24,000 rands. So guys, with that, you've been wonderful. Thank you very much. Yeah, that's all. If you have any questions, please you can contact me. Please don't forget to subscribe below in my YouTube channel so that you can get notification immediately when I upload a video. You'll be the first one to receive a notification. So subscribe and subscribe and subscribe. Thank you. God be with you.